Good afternoon, traders and investors. Will back here with another one. Well, guys, the Federal Reserve today pretty much crushed the bulls' expectations of further rate decreases into next year, and also hinted at another rate increase this year, which was largely expected. But the tone of Jerome Powell's conference was pretty much what gave the market a bearish lean here into the close here. So most of our major indexes here on the day used to be green, but ending pretty red. Big swings today and big volatility, guys. So we're going to take a look at what the Federal Reserve said that impacted the market so much. We're going to take a look what the impacts were on our major indexes. Lastly, our major tech names, and also a look into my portfolio because I did close some positions and then open some new ones after the negative news today. So without further ado, guys, let's get into it here. SPY down 0.92% on the day. QQQ down 1.44%, but they were green prior to the speech. And unfortunately for the bulls, the bears just completely took over after Jerome Powell started answering questions here. So I'll give a quick refresh on the heat map here. You can see before our Federal Reserve meeting, everything was decent except for big tech. And now take a look at after. Broad market sell-off as the market started to present us with the news. Also on the one-day relative here, you can also see that prior to, I refreshed it a bit too quickly, but prior to we had pretty much green across the board, and now pretty much everything tending to the negative side here, guys. So big day here. I'm not gonna lie, I was expecting a bit of negativity here if Jerome Powell didn't give off a very bullish tone, and that's exactly what we got here. So what exactly did they say, right? It all was not as bad as it seems. However, the markets, once again, quick to price in new information here. So let's take a look at it, guys. Fed declines to hike, but points to rates staying higher for longer. That was really the line here on this today's meeting here, the point, right? The real meat on the bone here was that the rates are going to stay higher for longer. A lot of traders and a lot of institutions were pricing in 3 rate decreases for next year. However, what Jerome Powell and the SEP came up with, the summary of economic projections, right? The dot plot, what they came out and said essentially is that not only were we not potentially going to get 3 decreases next year, we may even get 1 increase into early next year, followed by potentially 2 decreases. But I have to stress this point, guys. The Fed is data dependent here. So yes, they're making projections, but the Fed is not in the business of really predicting where the data is going to take them. They have been reactionary to the data so far. So if the data in terms of inflation, if inflation keeps trending down potentially quicker than they expected, and the economy stays quite good and the jobs market stays tight, they may not have to follow through on keeping these rates as high for longer. But as of now, it does seem that they are starting to give the market the impression that they want for people to assume the worst case scenario, and that way they can play the card if ever they have to, that they can decrease rates quicker should the data allow them to. So a few key main points here. The Federal Reserve had held interest rates steady while also indicating it expects 1 more hike before the end of the year, which we knew, and fewer cuts than previously indicated next year. So 2 cuts instead of 3 potentially. Along with the rate projections, the Fed also sharply revised up its economic growth expectations for the year, with GDP now expected to rise 2.1% this year. The previous expectation was 1.9. So economy still doing good, right? So what happened today, guys? The big reaction was around the SEP. So this is the dot plot. A lot of you guys may know this, but this is where all Federal Reserve members come together and give their expectations of where they believe that rates should be coming into the next few years. So as you can see, this is this year, right? 2023, the rates are set here at about between 5.5 and 5.75. That's perfectly in line with expectations. I'll remind you, the current Fed funds rate is 5.25 to 5.5, and now we are expected to go up all the way to 5.5, 5.75. The negative data here, guys, came for this year, 2024, as you can see it down here, right? These dots, so every single dot here is a Fed member, right? So prior to this meeting, most of the projections were between 4.5 and 5%. The problem now arises is that a lot of our Fed members here have increased their potential rate targets above 5%, all the way still to 5.5. So potentially, instead of getting us all the way down, let's say we go up to 5.75 by the end of the year, right? instead of going to 5 or below, which would be 3 rate decreases next year, 0.25, 0.25, 0.25, now potentially we'll only be sitting at 5.5 to 5, meaning, right, the median in here at this higher line of this expectation is 5.25. So we may only get 2 rate decreases next year, if any, which is why Jerome Powell today was very adamant on saying that the job was not done. They're pleased with the progress. Yes, the economy is doing good, but they may have to maintain rates higher for longer, which is where the negative reaction came from. This was not the market expectation for next year. So as usual, the market starts pricing in negative information right away, guys. If I want to leave you with one takeaway from this entire Fed meeting, okay, this is going to be the most important takeaway of the entire thing. This is not the time to be investing in companies that do not have positive earnings and that do not have positive free cash flow. A lot of these companies coming into Q4 and Q1 of next year, guys, especially if they're large holders of debt, if they have to issue new debt to keep their business running, right, it will be at very, very, very high rates. Or if they have to come to the stock market to raise capital for their business ventures, that will cause share dilution. So I personally will be staying away from companies with negative net earnings, even if they are growth companies. In my opinion, this is not the time to be investing in these growth companies if they are not posting positive earnings per share or positive free cash flow. That is the moral of the story that I want to leave you guys with, okay? So let's get into our indexes right away and see what we're dealing with here. Well, SPY, unfortunately now, daily downtrend is underway. In this case, since it's a daily downtrend here, guys, any single bounce is going to be for a lower high, anything below 451, just for a lower high for daily downtrend continuation. The bears have absolutely taken over this chart. So since we are in a daily downtrend at this point, you have to look up to the weekly, and the weekly is going to become the most important chart here over the next few weeks, as we are currently challenging for a potential weekly downtrend. Weekly downtrend, I will remind you, we have not had a solid weekly downtrend here, guys, pretty much since last year, right? This entire year is pretty much stuck in a range here. Haven't had a actual weekly downtrend here in over a year at this point, right? So if we do flush 433, guys, it'll be very notable in the bear's capacity to set the weekly downtrend. If you set the weekly downtrend, just further monthly consolidation. I will remind you that our long-term bulls are in control and do have a lot of space to work with, guys. The level we'll look out for here, if you lose your weekly uptrend here, if you lose your 433, the next target level, guys, down here, it's where the moving averages are pretty much in the 4,200 range, right? The 420s on SPY is going to become the next crucial area here. We're going to take this one day at a time. The bulls can still save this by forming a tightening range as they price this news in. But if we do flush here, guys, 433, just want you guys to know that it'll be a weekly confirmed downtrend, and weekly confirmed downtrends require a long time to reverse, right? It could potentially take up to a month and a bit. So just keep an eye on that, guys, for the next month, month and a half of trading, guys. It's not going to be the easiest markets if bears take control of these weekly time frames, all right? So we're going to take this one day at a time. The bulls still have a little bit of room left, about 1.5% before this 433 area, but that is going to be crucial. It's time to build our shopping list once again, get some buying power on the side, save the companies that you want to buy, put them on a watch list here, draft out some key levels, and get ready to go shopping here, because even though that the Federal Reserve has said they'll maintain rates higher for longer, I do believe that 2024 will not be a disastrous recession and will be fairly good for markets overall here, right? So keep that in mind, guys. QQQ, same thing, right? Daily downtrend is started at this point. Any bounce at this point, guys, is going to be for a lower high, anything above 378, lower high for further downtrend continuation. If you want the bulls to take care of the business here, right, they have to get back above our most recent high, 378. Get close as possible to reset the daily uptrend. If they don't do it, right, anything below here is going to be for the daily downtrend continuation. Weekly levels on QQQ are absolutely crucial for the same reason as SPY. Anything below 355, flush 355, guys, you lose your weekly uptrend. You set the weekly downtrend, and at that point, you will be due for further monthly consolidation. If that does happen, guys, I will be looking out in the 40 area, as low as here, right? Potentially into the end of September and maybe early to mid-October here. So the next few days of trading here, the next week of trading is going to be really information driven here as to whether or not what the markets are going to do for pretty much the next month and a half. So keep a very close eye on that, guys. Not the time to be piling in on growth stocks, even though I know that some may present juicy opportunities here. It's time to play this a bit more defensive and be really picky with the companies that you choose to buy. Now, XLF financials, XLF also losing the daily upswing here, right? Flushing our previous lows, not by much, but they did flush it, guys. We were in a daily uptrend up here, right? We were looking for the capacity for the bulls to push above 35. Didn't get it done, guys. Reversing this now. Daily downtrend has started. At that point, weekly consolidation is underway, right? And weekly lower high at this point has been set. So now all eyes remain 3360 here. Are the bears going to capitalize on this and flush into a weekly downtrend, something that we haven't had pretty much since this banking crisis back in March, right? So key levels up here on XLF as well. XLF was one of our nicest bulls here in the past few weeks, but currently with today's trading, guys, losing a lot of ground compared to that. So keep an eye, guys. Key level at this point right now, first area of support going to be 3410, and then we're all the way back into the 33s. So crucial levels coming up for XLF as well. I will be looking out for potential companies here. My favorite company is Charles Schwab. As you guys know, I've said it on the channel for a while. Weekly downtrend on Charles Schwab. Very possible at this point, guys. And if we do start trending down towards the lower $50 range, that is where I want to pick up some shares of this company here, okay? So just keep an eye on that for financials. Very crucial. XLV Healthcare, right? Daily downtrend just continues. We got our lower high, was not able to break above our moving averages here, was not able to break above our upper bound of our support area here as well. So now we look to lower lows potentially, right? 130.69, going to be a very crucial level, guys. Flush this and your weekly downtrend simply continues here. And then the true line in the sand level, guys, remains 129. I'll remind you guys, why is it so important, right? Because if we come back too low here, guys, towards our 127 area even, your monthly lows are potentially in jeopardy. So you need the bulls to play some good defense here. Usually healthcare is a defensive sector. So I wouldn't be surprised if some money comes out of tech and maybe financials because of high rates here. It's very possible that it rotates into Dow Jones and XLV Healthcare because they are known to be the more defensive names here. But the bears are in short-term control of this chart as a whole, guys, right? A few companies that I'll be looking for, AbbVie, right? I'll be looking for AbbVie here, potentially on a pullback here. There's some nice other ones as well that I will be looking at for potentially put option wheels. We're talking about Abbott Labs, anything in the high in the mid 90 range. I will be looking for Abbott Labs as well, and potentially some Charles River as well, guys. If we do start trending down lower to the 180 area, right there down here, this whole support area, I may be playing those as well as some healthcare names, right? So some names to look out for in healthcare. Now, IWM Russell absolutely falling through the floor, guys, as bulls can just not get anything done at all. Daily downtrend is now well in motion here, absolutely flushing our previous lows here at 181.80. We are now already into our target area of support. This whole green box was previous resistance for a very long time early in the year, right? All the way from March, all the way through pretty much end of May here. And now we are going to see, can we keep it as support here? Or are the bears just going to take over and flush through? So obviously with the daily downtrend, we are looking up at the higher time frames here. The bears now completing your weekly downtrend, guys. Head and shoulders pattern. We were watching out for it. It actually fell through. Now we're coming in lower here. So weekly downtrend. What does weekly downtrend mean, guys? Your monthly consolidation here is well underway here. Now we're going to be looking, guys. 169 is your key monthly support. So any growth bulls here need to play some defense with this whole larger support area down here, 175 all the way down to pretty much 170 area. This whole little pocket right here, guys, gonna need the bulls to play ball. We have a first one right here, but if we do come down all the way into the lower 170s, guys, I will be looking to write some options on the Russell here personally. But as of now, guys, bears in full control of the weekly and the daily here. So bulls need to start everything from scratch. Going to need eventually to set a daily uptrend whenever this chart does bottom out. Dow Jones names, Dow Jones also breaking down below here, guys. Not quite flushing, but definitely breaking down, looking to hold the tightening range here, guys. If we do flush our previous lows here at 34,300, I'll remind you that the daily downtrend will be potentially started here, and you will have to look out once again for your weekly support down here at 34,000. 34,000, this level right here becomes absolutely crucial, guys. Lose 34,000, you lose the weekly uptrend. If you lose the weekly uptrend, guys, your monthly consolidation continues. Anything above pretty much 32.5 is still a monthly higher low, but not a lot of space to work with here under here, guys, right? I know there's a lot of big support down here, but the bulls need to step it up, need to rotate here. If they come out, I'll remind you, if they come out of QQQ and they come out of financials, I'm expecting a defensive rotation here into XLV, into Dow Jones as well here, right? So let's keep an eye on those levels. The crucial level for me remains 34,000 to protect from this weekly downtrend, okay? Now, let's take a look at our big tech names, guys, because a lot of big tech names also in jeopardy of losing the weekly uptrends. All right, excuse me, guys. So Apple here, right? Apple was actually doing fairly decent on the day. As you can see on the hourly chart here, early in the morning, we were chilling up here in the 179 area, but now intraday losing the hourly uptrend here, guys, and a big pullback day on Apple, if I do say so myself, right? So Apple, key level for me, guys, at this point, right? I'll remove this guy right here. But what are we looking to protect, guys? The bulls we're looking to save and potentially reset a daily uptrend. At this point, guys, the bears have taken back a lot here, really in a choppy area right above my sweet spot here, 175 to 170. So what are we looking out for, guys? Your key level is 172, all right? If you flush 172, Apple starts a weekly downtrend here. Weekly downtrend on Apple has not pretty much been started since all the way last year, right? So this entire year, since January, we've just been a consistent weekly uptrend this entire time. If you lose this, guys, it'll be the first time all year that Apple's lost the weekly uptrend. If it loses the 172 area, right, which is right down here, weekly downtrend is started. What do the bulls need to do? Bulls are eventually going to need to reverse this into a daily uptrend, something that they weren't able to do right here with today's trading. We'll see if they can recover a bit tomorrow and Friday or potentially next week here, but not looking the best here, guys, right? Apple bulls were not able to get back a lot of this most recent downswing right here after the bad China news. And now it does seem as though we want to push back lower into the 175s, lower than 175. So keep an eye on that, guys. If we lose the weekly uptrend, though, tons of space on the monthly for further monthly consolidation. I'm expecting this whole 165 to 175 range, guys, should be a good area where bulls can play some defense, potentially some accumulation for a while. But like I said, guys, it's going to take some time. If we do set the weekly downtrends here, guys, it's going to take some time to reset into a weekly uptrend if we do get it here, potentially looking for, mid to late October into November. So a lot of these names, guys, as I said, the indexes and whatnot, this next week of trading here, the weekly downtrends, if we get the weekly downtrends, you can be guaranteed that we will not get exponential rallies to the upside for at least another month. So position accordingly. AMD losing all types of traction today here, guys. We were all the way up into the 103 area. And I mean, top to bottom on the day here, guys, today, right? We're talking about almost 4% again on AMD, just not able to keep it up. We're now toying with my sweet spot here, 104 all the way down to 98 here, guys. If we lose this, right, it is a weekly current downtrend right now. All right. And if we lose this current area here, guys, this whole 98 level right here, well, we are going lower. And where's the next area of support, guys? You're talking all the way down to roughly your $90 range. AMD monthly consolidation continues. Anything above 82 is just looking for a monthly higher low here. No biggie, guys. I'm still a very big proponent of AMD here. I like the shares below pretty much 100 here. So if we do get an opportunity to get them even as low as 90 or potentially in the $80, that will be a definite buy for me in terms of AMD. But now the daily bulls are in full control here, right? Your weekly bulls are also in full control, and we're in monthly consolidation. So bulls need to start everything from scratch. As soon as this move bottoms out, we're going to measure the size of the bounce and see if we can recapture the daily uptrend here. But as of now, fighting with my support zone right here. Amazon Amazon, one of our lead bulls, now not looking so hot, guys. Look at the size of this move. And now the bear moved back into it, right? So the bears have almost recaptured the entire move on Amazon. When I see that, guys, I look for weekly tops, right? So what is the case on Amazon here? Still, anything above 133, you're looking for the daily higher low. Best case scenario for the bulls right now is to tighten up above this range here into a tightening range. But if for some reason, guys, you lose this 133 area, guys, we are potentially setting up for the daily downtrend here. It will be further weekly consolidation, and anything pretty much above 131, right? This level right here, 131, will be still for a weekly higher low or potentially tightening range into further of October, all the way through, late October as well. So we'll see, can Amazon and Google and Tesla, which are lead bulls, can they hold the weekly time frames, or is even Amazon maybe going to lose the weekly uptrend and send it into potential monthly consolidation? Amazon has not had monthly consolidation this entire time either, right? So we're going to keep a very, very, very close eye. The next couple days and weeks of trading, guys, are very important. These weekly time frames are absolutely crucial here. So I know I sound kind of bearish, but I'm just trying to prepare you guys in the event that we do get these drops that we've maybe been looking for here for a while. As I've mentioned, August and September, seasonality not good, inflation on the uptick. We've now had a more than expected bearish Federal Reserve come out, right? So all of these things definitely playing in to this upcoming quarter here, guys. And it would not surprise me if we do get further consolidation at this point for the rest of September and even through the month of October here, right? So let's just keep an eye on that. Now let's move down to Google. Google, one of our other lead bulls, guys, completely losing it here, right? So our higher low was set at 135 roughly, had a small little uptrend going, but I was saying I didn't like the size of this move up here. Google unable to push higher, but it's normal, guys. Google cannot do it alone. Even though it's a lead bull, if the rest of the market doesn't cooperate, Google is also going to plunge. So Google down over 3% on the day here today, right? Losing the pattern of the daily uptrend at this point, right? Big down move down here. We're going to be looking out for the 128 level at this point, guys, right? If tomorrow we crush 134, then you'll have lost pretty much your daily uptrend here. We'll be setting up for the potential daily downtrend. If you get the daily downtrend, guys, weekly consolidation is underway. Anything above 128, still a weekly higher low. So a lot of space. Do have the 12 EMA down here as well as support here, right, guys? But even Google has not had monthly consolidation, just like NVIDIA, for a long time. So a few of these names, guys, right, off the top of my head, right, Amazon, Google, Apple, right, a lot of them have just not have enough monthly consolidation this year as an entirely, right? So, NVIDIA as well, Meta, Microsoft even, right? So these are some of the names, guys, right, that they may just take this month and potentially October off as well. If they didn't already start consolidating in August, well, we may be getting it in September and October. So get ready, guys. Google, still a lot of space, right? Above your 128 for your weekly here. But I just want to set the expectation that if the entire market continues to come back here, and if we lose the weekly uptrends on SPY and QQQ, these tech names are likely also going to consolidate. I'm not talking about severe consolidation, but some consolidation indeed. Now, let's move on to Meta. Meta as well, like you can see this chart, right, guys, on the weekly already pulled up. This does not aspire confidence, right? Look at these last 5 weeks, how Meta's been struggling. Can you find such a struggle in the past 5-6 months on Meta? No, right? So the times are changing here. It may be time. Look at this monthly chart. No monthly consolidation whatsoever. So that's why I'm saying I would not be surprised if a lot of these names start doing it, right? Now, Meta potentially setting up for the daily downtrend, guys. If you lose your 297 area here, very possible you lose the daily uptrend. This entire daily uptrend lost with one series of lower highs and lower lows. So if that does happen here, if we do flush this 297.50 area here tomorrow or Friday, well, your weekly consolidation continues here. And at that point, your weekly lower high is set. And then all eyes become on 275 to figure out if they will be able to hold in a tightening range, or if the bears take this into weekly consolidation, which sends it into monthly consolidation as well. So weekly timeframes on all of these charts are absolutely crucial here. I'm not worried about the short-term price action here on the daily, right? Because daily bears are starting to get in control of a lot of these names here. So all the most important time frames, guys, are the weekly on all of these charts here. So just remember that on big tech. Now, Microsoft as well, right? You can see this entire daily uptrend here pretty much in jeopardy of being lost here. So key level for me, 319. If they lose 319, you've lost your daily uptrend. You set up now with the bears taking back so much here, you set up for potential daily downtrend. Daily downtrend, if you get the daily downtrend, guys, you look up to the weekly, that'll be further weekly consolidation. And now Microsoft as well, 312. 312 is your weekly high or low. Lose this, you lose the weekly uptrend. Microsoft, further monthly consolidation. If we do get consolidation, guys, just be patient. My sweet spot, 306, all the way down to the 280 level here. So can the bulls save this weekly uptrend and tighten up? Or will they set the weekly downtrend and send us into potentially further September and maybe even October consolidation here for the next few weeks here? So crucial level on Microsoft here is this 310 area here. Absolutely crucial. As all our tech names that I've been going through here, guys, the weekly time frames are the most important ones for me, right? Lower highs are set. Now, will they set lower lows? Remains to be seen. Now let's move down to NVIDIA. NVIDIA here as well, right? NVIDIA, same concept. So same concept, guys. I want you all to be looking at the weekly timeframes from now on for the remainder of September and even in October, okay? So daily downtrend is set on NVIDIA once again here, right? So no surprise there. Daily bears are in complete control. Any bounce is just for a lower high, anything below 460 for potential lower low continuation here. NVIDIA, you know, flirting once again with disaster here. Why? On the weekly, we're coming very close to our 400 level here, guys. If you lose 400, you will lose the weekly uptrend. NVIDIA has not lost the weekly uptrend pretty much since October, right? Haven't got it since last September, last October. So over a year of weekly uptrend on NVIDIA may just be time for weekly downtrend on NVIDIA and monthly consolidation on NVIDIA as well. Keep in mind, there is a very big gap to be filled here in the whole 350 all the way down to pretty much $310 on NVIDIA. Now, I know that's a heck of a drop here, guys. It is NVIDIA, so we can potentially hold up here. We don't have to necessarily fill this gap, you know. We could trend lower on the weekly, down into here in the high 360s, and then potentially reverse it, right? So it doesn't have to fill the gap necessarily. It is NVIDIA, but keep an eye on your 400, guys. Lose the 400, and I lose confidence in the bulls' capacity to just V-shape this as they've been V-shaping the entire year now. Now NVIDIA, right? The news isn't new anymore. So you're getting this tapering off of the interest curve as people are no longer amazed by what NVIDIA is doing. Yes, they're priced to perfection right now, right? So any little mishap in NVIDIA, and we don't have any earnings coming up here soon. So any little misstep on NVIDIA here, you could get some severe pullback. And my target sweet spot will be in this lower $300 range if we do pull back there. So for now, guys, playing it a bit defensive on NVIDIA, 400 area is key support here for your weekly higher lows. Now let's move on to Tesla. Tesla pulling back as well. Tesla, top to bottom. Tesla actually had a very decent pop prior to your FOMC, right? Very decent pop on the day. You were talking, they were up almost 2.5% on the day. But now top to bottom into the close, guys, 4% of downside here. So now Tesla, daily consolidation remains underway right here, right? Anything above 243 is still looking for a daily higher low. So decent amount of space here. And we are coming into our little support zone here that I've labeled the 257.50 area. Going to be pretty crucial on Tesla for some short-term defense here. But Tesla not looking as bad as the rest of some names here, right? Daily uptrend is still in motion here. I'll remind you, Amazon, Google, and Tesla are your lead bulls. So if your lead bulls turn bearish as well, watch out, right? On the weekly, even if we lose the daily here, potentially, right? If the bears come down too much and we set up for the daily downtrend here, I'll remind you that anything above 213, we are just looking for a weekly higher low, potentially set a new weekly uptrend into October here, right? So the bulls with a lot of space created, Tesla with some decent space. I'll remind you that if ever we do pull back into here, my sweet spot starts at around $230 here. But as of now, bulls not looking too bad at all, if I do say so myself, guys. Just a little bit of a pullback with the rest of the market. So we'll see how Tesla can keep performing here. Q3 deliveries, I believe, are starting to come out here in about 10 days on the 1st of October. So we'll see how they did for your most recent quarter here. But usually Tesla Q3 and Q4 should be pretty good for them. Now, our two last ones, Palantir and PayPal. Palantir losing ground. As I said, guys, this was one of our weakest bulls in the past couple of weeks here. So now Palantir breaking down, guys, breaking down. The most important time frame for me is the weekly here at this point, 1377. Head and shoulders pattern on Palantir, right? Just like the Russell, essentially, right? So 1377, crucial level for me, guys. On the daily, we are pretty much just range bound, right? So it's either going to be a break of 1640 or a break of 1370 on the downside. If you ask me to put my money on it, guys, the break to the downside is looking very, very likely, right? Palantir just getting caught up with the growth stocks to the downside here. So 1370, if you break that, guys, watch out. Weekly downtrend will be in motion. You'll be looking for further monthly consolidation on Palantir here. And Palantir, I'll remind you, my sweet spot for this stock remains between $13 and $12. So if we do pull down there, depending on the size of the move down here, and if we get oversold, I will be looking to write some additional contracts on Palantir. Still working with some bit of a temporary support levels here, right? We got 1430, you got 14, and you got the 1370 as your last line in the sand level here. So bulls still do have a bit of support down in this whole area, guys, but not looking the best. The size of this weekly bounce right here, very, very, very weak. So if we do start trending lower here, 1370, guys, key level. And now lastly, PayPal. PayPal, unfortunately, falling apart with the rest of the market here over the past 4 days. PayPal kind of topped out here almost at $66, and now we're down over 7% from there. Just goes to show how quickly things can change in the markets, right? So daily uptrend is now in jeopardy of being lost, guys, unfortunately for PayPal. Again, 60.3 is your line in the sand level. Lose this, and you lose the daily uptrend once again. At this point, the best chance the bulls have is to set somewhat of a tightening range here. But if you lose this level here, guys, you set up for the daily downtrend. And once again, you set up for further weekly downtrend continuation, right? High, lower high here, low, you potentially set up for your weekly downtrend lower lows here. If we move down into the $50 range, that is the spot where I start to DCA. PayPal at this point is going to become a long-term play for me, guys. I don't expect with current market conditions that we get any type of phenomenal rallies out of PayPal anytime soon. It's becoming more of a value play than a growth play for me anyways. I like the valuation at this level. Technicals not looking the greatest anymore here, guys. I wouldn't be surprised if we get a further move down into the 50s here, right? And we continue to move lower on PayPal here. The one time that I'll be confident that PayPal is going to go on a run here, guys, is when we can recapture a weekly uptrend. But this entire time, if we can't even capture a weekly uptrend here, guys, right, I can't be exponentially bullish on PayPal. It's unfortunate, guys, but I do think that this stock will perform quite well in the next 6 to 12 months. So I'm getting my timeline a bit extended now at this point, right? So that's pretty much it for the day on today's technicals, guys. If you want to see the portfolio, there's a lot of things to cover here. So let's do it quickly, all right? So portfolio on the day, 41.61%. You can see that we didn't drop too much from yesterday, just down pretty much 1% right here. So SPY down currently with today's trading, they'll be down at around 15. So we're still around 42, which is not that bad. And if we compare to the NASDAQ here, NASDAQ over 1.5% decline. So we did outperform the NASDAQ. We stayed a bit ahead of it today. NASDAQ down probably to about 30% after today's trading. And we're still at 41.61. So doing fairly decent here. Now, in terms of the positions here, you'll see that there's a bunch of positions that I didn't necessarily talk about prior, right? So didn't have them in Monday's video, but what did we do? You'll see that yesterday we actually opened some, I'll start from the bottom with the ones that are closed, okay? So we had the AstraZeneca 65 puts. So we opened those yesterday off of yesterday's trading when the stock was trading down here. Now we wrote the 65s. The 65s, I'll remind you, are all the way down here, guys, okay? So with today's trading and today's pop, we were able to close them. You will see that I opened them pretty much yesterday here. You'll see that I sold them at 30 cents a pop, right? So 2 contracts for 30 cents each, and we were able to close them today for 9 cents. A lot of the things that I closed today, I closed before the Fed meeting. So I was protecting the gains here on the day, guys. Did a good job of that. That's for sure. AMD 97 puts. You will see that we wrote the 97 puts last Friday. I don't think you can see them. Actually, you can see them here. 57 cents, right? We wrote them for. You'll see that I closed them today at 1:23 p.m. before our Fed meeting here at 14 cents. So pocketed around 80% premium there as well. Another position that was closed was the Apple 172.5 puts, right? That we wrote last week. If you can see them here, you'll see that we sold them for $1.12. We closed them today for a very, very decent profit, guys. Almost 85, 86% profit for 18 cents prior to the Fed meeting here. So decent close premium on the day as well. The UPS is here. You'll see that this is a second position on UPS. I did a first one yesterday. You'll see this here, right? So we've been trading this week, guys. Sold the 155 yesterday for 55 cents. You'll see that we closed it today for 31 cents. So we took it off the table before the Fed meeting. And now you'll see today after the Fed meeting, we were actually able to write it again for 50 cents. You can see it right up here. We wrote them 3:44 p.m. for another 50 cents. So we got all the premium back. So we're going to try to double dip on this one for the week. UPS, pretty good level here on UPS here. The 155 is all the way down there, that yellow line. And you can see UPS, this line has held as support for pretty much the past 3 years, essentially, right? So going to be tough for the bears to break it, especially since we had some good FedEx earnings today after hours. And now we're going to go, so that's the UPS. The Teslas, I was able to close them as well. You remember, I had the 255s from Monday's video. So Tesla 255s, we wrote them on Monday here for $1.90, right? So actually, you think this was last, this is pretty much on Monday, right? So your 255s were wrote for $1.90. What did we do today, guys? We closed them right before the Fed meeting here for 35 cents. So captured almost pretty much like $1.60 on those. So once again, like 80% plus profit on those. So today we closed a lot of premium. And what did we do? After the Fed meeting, we went right back in here. You'll see we sold them again. So I opened the position again for 98 cents. And we also did the 257 fives for 119. So that's why you see two new Tesla positions here. The 255s that we reopened here, and now the 257 fives for $1.18, both down on that because I didn't write them at the end of the day. You'll see that I wrote them at 15 minutes, 10 minutes before the close here, but unfortunately the market just kept dropping into the close even though I waited. So I was patient, but the market just continued to drop a bit further. So a few of these positions, a bit of recaptures here. The UPS, we closed and now reopened at pretty much the same price. Tesla, we closed and reopened at a better price. So doing some good things. AMD, you'll see, closed the 97s. What did we do? Opened the 98s now for 42 cents for Friday. Down a little bit on them. We'll see how those keep up here. The 104s still in play, haven't touched those. The 66 calls on PayPal, pretty worthless. And now you'll see the MGMs, they're pretty much, the premiums coming out of them, 38 and the 37.5 put. So we'll see if we get assigned on those. But as of now, pretty good. So moral of the story, guys, today, we did take a little bit of a decline here on CSIQ and PayPal throughout the day. TMF, obviously, your 3 times leverage play on 20-year bonds. Rates higher for longer today and potentially less of rate decreases next year sent yields through the moon through the end of the day. So that's pretty much normal here. But you can see, guys, decent rotation on the premium. And I do have some pretty decent levels on these plays here. So we'll see if we get assigned or not. But as of so far, very decent week in terms of premium farming here, guys. So if that was a bit much, please feel free to rewind the video and you'll see what I did. I closed the premiums before the Fed meeting, and then after the Fed meeting, when the stocks pulled back, I pretty much got the same amount of premium back. I was able to write the puts again and get even more money for them here, guys. So that's going to be very good. If ever we get assigned, our average cost is going to be significantly lower than our strikes here. So I hope you enjoyed the video today. Bit of a long one, but obviously very major day. Focus on the weekly timeframes. They will be key as they will determine what's going to happen for the next month and a half, guys. All right. So I hope you guys had a good day in trading. Once again, my name's Will. If you liked the video, consider liking the video, right? Drop me a like. I always appreciate your engagement. And if you're new here, really consider subscribing to the channel. We'd love to have you here. And as always, if you have any questions, guys, on anything, especially after today, right? Write them down in the comments for sure. But I'll remind you, now is the time to be playing defensive. Stay away from stocks that don't have positive free cash flow or positive earnings. You want companies that are churning out profits despite this high rate environment. And you'll see that's why all of my put plays are companies that do exactly that. So take care, guys. I'll see you tomorrow after the close, and peace.